Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the key US stock indices. There has been a lot of activity in the major US stock indices over the last couple of days, ever since the testimony by the Fed Chairman Jay Powell. All right, okay, so I'm going to start actually the video by looking at the bond futures. So this is what we're looking at, the Treasury bond future. This is long bond future, 30-year maturity. And in fact, what I would like to show you is that in what we have seen over the last couple of days is actually the bonds have been rallying, which means that the yields are coming down. Normally, if the bonds are rallying, yields are expected to come down. That should be positive for the stock market. But what we have seen is actually a sell-off in the stocks. So let's also take a look at the 10-year. So here you can see in the 10-year note as well that the price is moving higher, which means the yields are actually coming lower. However, over the couple of days, the stock market has seen a fair amount of stress. So, and also the stress is quite a lot of it is actually coming um, in the banking stocks, which is a little bit concerning. So we'll just quickly have a look at the major banks such as JP Morgan. You can see strong low day today. Citigroup strong low again today. So this is something that we need to watch as well, that maybe there is some stress coming in the banking sector. Okay, so let's just go back to our futures. So here, what we are looking at is the daily chart of the E-mini S&P 500. And if you remember the last video which we had done, we were really carefully watching this level of 39.44 as a key level to watch for any potential um, support. And if this level actually gives in, then we'll be looking at a market in a different way. And it looks like the pattern we were following, this ABCD for higher prices, that cycle might have come in early, and the high which we reached on 42.44 might have been the high for quite some time. So with a close like the market closed today, this support could probably give way. And if on a closing basis tomorrow, Friday, when we also have the non-farm payrolls coming out, um, if the market moves sharply lower and closes below this level, then that would mean that we are actually looking at this ABCD to the downside, the one which I have in the purple, and we could be looking at a 38.50 level to 38.40 level just on the ABCD projection. So what I'm going to do is actually clean up the chart a little bit. I'm going to remove this one as the resistance zone area. This blue ABCD, I am for now going to leave it just there. But if this support gives way, then in fact that possibility is also gone. Just doing a retracement from the 13th of October low. So that ABCD will take us to the 61.8% Fibonacci retracement around 38.2750 level. So that region of about 38.40 to 38.27, 25 could be a possible support area. So this is what we are looking at in the ES E-mini. Looks like with the strong close to the negative which we have seen today, perhaps we'll be watching this level very, very closely tomorrow. Now let's take a look at the Russell 2000. So look, This is the one which we had mentioned yesterday to also watch very carefully, and the reason was that it was right really touching this key support of 1870 level. It was a confluence of so many Fibonacci retracements here, and look, it has actually closed below today, so broken that key support. So what we are looking at is essentially an ABCD formation here to there. So this can go to just on the ABCD projection 1795. And if we just take some Fibonacci retracements, in fact, what I should do is use these. Yeah, so the 61.8% comes around 1783. So just like S&P 500, we will be watching this area as support, potential
I'm
support.
here to help. Get to know Siri at
Siri, go away.
apple.com.
Apologies, guys, for Siri. Just I don't know how it appeared. Okay, and there we go. Let's also take a look at our NQ. So the NQ is actually acting stronger, and it's the price is held a little bit better than the other indices. What we have seen is basically the price around this area, whereas in the Russell 2000 small caps have actually taken this low out. S&P 500 is hovering around this one. So this will be the ABCD pattern formation. If we look at this, then what we are looking at is essentially around the 11,537 level, and that is also very close to the Fibonacci retracement from the 13th October lows. So these are the 13th October lows around here. So that's gonna be a support level to watch. Okay, so the question mark. Then this one is the really interesting one. This is the Dow Jones E-mini, and if you remember, we were looking at this triangle, which is a range, and this was really testing the 38.2% Fibonacci retracement, and it has actually broken out of this range now to the downside. So that's also sign of weakness, and perhaps it could just move towards lower levels around 31,758, and 61.8% comes around 31,100 to 31,200 roughly. So that's quite a while to go. Um, if indeed it begins to go in that direction. But it looks like the 50% retracement, which comes around 32,000, probably might be the next kind of area to look at for this one. Let's take a look at the cash Dow Jones, because we like to take a look at the cash market. So the cash market is a little bit interesting because it has broken out of the trading range to the downside, and it's just right at the 32,322 level, which is the closed just below the 38.2% Fibonacci retracement. So if there is going to be a let's say a move lower in the markets tomorrow, who knows what the number is going to be like for the non-farm payroll. Then the 50% comes around 31,617. So we could be looking at that level around here. So guys, this the way we are looking at the stock indices, we are also looking at what is happening in the bond market because of the fears with the inflation. It's impacting obviously the yields, which is having an impact. But what we have seen is actually the bonds have actually risen. So we looked at the 30-year Treasury bond, long bond future. We have seen the price move higher, which means the yields have come lower. We took a look at the Treasury 10-year note, same picture. The uh, the prices moved higher, the yields have come lower. However, there is still stress in the stock market today, and the rise in these or the yields going lower could be because there is a flight to quality where perhaps some hedging is going on where these treasury instruments are being bought you know, by some players. But if you really look at the last video which we had done, we had actually gone and shown a kind of yield structure by looking at the 2-year note. And so if you take the 2-year note and you look at the 30-year long bond, you take the yield of the 30-year long bond and you subtract the yield of the 2-year note, you will see that there is a negative figure, and that is a yield curve inversion where the shorter end of the curve is actually yielding more than the longer duration treasury bond, long bond, and that usually uh, is not a good sign. And also, let's take a look at the dollar as well. So the dollar I thought today was quite interesting. Why? Because the dollar right at the this our ABCD pattern has been met, and we have been looking for a 38.2% Fibonacci retracement. So it's in that ballpark figure where we are expecting resistance. And the dollar actually also sold off today, so that's pretty interesting that we have a sell-off in the dollar. We also have higher bond prices, lower yields for treasury bonds, but the stock market was still under duress or stress. So that's an interesting one. And so who knows what the figures tomorrow might be, but if the figures might point towards uh, stronger figures, which would mean that Federal Reserve, because of the data which had come in from January for inflation, they might have to do a larger than expected interest rate hike. So previous meeting they had done 25 basis point. This meeting, the probability for the 50 basis point will be higher, which could actually put risky assets like stocks under stress. So this is what we are looking at for now. So guys, if you like our video on how we do the analysis, please do subscribe to the channel, and also hit the like button. That way you will that way I will know that you guys like the videos. So it just encourages me to keep on producing them. So thank you very much. Good luck and good trading.